So in the first video, I showed you what actually happened when I ran my DIY trading system. 35% XRR returns over last 4 years with 5 multi-bagger trades. In the second, we saw how execution was surprisingly simple. Just 5 minutes of efforts once in a month. But there is still one big question left. What's the real logic behind the system? And that is exactly what we will discuss today. I will also share some practical challenges I faced while executing it and how I overcame it. And finally, I will share my Google Sheet so you can test it yourself. So make sure you watch till the end to get the complete picture. And quick disclaimer as always, this is not a financial advice. I'm only sharing my personal experience so you can pick up some ideas and tune them in your own way. Alright, with that clear, let's get into the logic of the system. And that starts with a score I called RARM. But before we jump into the formulas and math, let's zoom out for a moment. Currently, there are so many styles of trading and investing. But one style that really caught my attention few years back was momentum investing. And that's what my system is built on. Now, the traditional way we all think about investing is simple: buy low and sell high. That's what we have been told from the very beginning. But momentum says something totally different: buy high and sell even higher. Sounds weird, right? Why would anyone want to buy something that is already at high price? By the way, momentum is not some any random idea. It's a well established trading strategy backed by decades of research. For example, back in 1993, a study on US stocks showed that momentum strategies delivered about 1% per month consistently over a period of almost 25 years. And then in 2001, same authors tested it again on fresh out of sample data and results were repeated. So it wasn't just a luck, there was a repeatable edge. Now, usually, momentum is measured using indicators like ROC and RSI, which are purely written based. But idea of adjusting by risk sounds interesting. That's how I came up with RARM score, which is very similar to Sharpe ratio. The formula for RARM is very simple. Average daily price change of last 1 year divided by the standard deviation of those changes. So, in simple words, you are rewarding steady performance and not just the crazy movers. So, here is an example. Two stocks moved from 50 to 100, so both gave same overall returns. But one moves smoothly upwards, while the other is like a roller coaster. So, with risk adjusted return, the smoother stocks gets the higher score. And this is exactly what I built into my Google Sheet. I created a named function called score momentum, which calculates this RARM score for each stock based on 1 year price data, and then we rank them based on this score. But formulas and scores on paper don't prove anything by themselves. The real question is, if I had actually run this strategy on past data, would it have made some money? And backtesting can answer this. So when I started this, I didn't know Python or any fancy backtesting libraries. So what did I do? I just opened Google Sheets, changed dates, created portfolios, and tracked returns manually. It was very slow and painful, but it gave me a rough idea whether this thing will work or not. And of course, manual backtesting has its own limits. It's very slow, prone to mistakes, and you can't easily simulate a very long history. So then I later coded it in Python. That gave me proper metrics like CAGR, drawdowns, and number of trades, all very neat and clean. But walking you through the code and detailed results would take some more time. So I have kept that for a separate video. Now here is the thing. Backtest, whether in Google Sheets or Python, are very clean and tidy on paper, but the moment you start trading with real money, things get messy. And that's where the actual learning happens. So let me share few practical realities I faced while running this system. For example, when I began, I bought all 20 stocks in one shot. That looked very systematic at that time. But later I realized there is a better approach, and that approach is gradual entry. Like keep adding new stocks as the system suggests each month. Same with exiting. Don't dump everything in one go. Phase it out slowly. So this makes both entry and exits smoother. Early days, I also saw too much of a churning, like 5 to 6 stocks getting replaced every month. So then I added a small filter. Only sell if stocks rank goes below 25 instead of 20. That one tweak cut my churn almost in half and saved my transaction costs. But the biggest reality check was about the returns. When I say this system gave me 35% XRR, then we often misinterpret as roughly 3% returns per month. But from November 2021 to August 2022, I booked losses in 8 out of 9 months. That's when I learned the hard truth. Momentum, or frankly any equity strategy, gives non-linear returns. So when market turn bearish, you will for sure face some losses. But over the long run, patience is what pays. Equal weightage to all stocks also sound great in theory, but reality it is completely mess. Say you want to invest 1 lakh across 20 stocks. So it will be 5k per each stock. But what if one stock price is higher than 5k? So currently there are around 23 stocks in Nifty 200 universe whose price is already higher than 5k. Example like MRF. Then either you have to increase your invested capital or you can skip that stock. And honestly, if my system says buy MRF, then I will just say thank you, next. And yes, even after all those practical realities, this system still managed to beat Nifty, give me multibaggers, and it felt really great. But the fact is, it's not something you can scale to a huge capital. So once your invested amount goes beyond certain threshold, things like liquidity, execution, and slippages may hit hard. These are the issues I never thought when I started this as a small experiment. So then I decided to treat this as my satellite portfolio, like a side dish and not as my core portfolio. By the way, I have also found a possible fix to make it scalable, but that I will discuss in a separate video. Okay, so you have seen the results, the execution steps, the logic behind, and some reality checks. Now let's wrap this up. I have shared my Google Sheet link in the description. It's in read only format. You need to copy to your Google Drive and play around. Test it, tweak it. Maybe you will come up with some smarter version. And I would love to know what changes would you make to this system. Or maybe you have some suggestions or some queries. Share your thoughts in the comments. I will be reading them. At the end of the day, my only intent is simple to share learnings and experience as a DIY investor. These days, we are bombarded by so much of a promotion and noise that it's very difficult to tell what is genuine and what just a marketing trap. So if you value such honest and practical content, do subscribe and share this with your friends. Thank you.